Ashok Sonthalia, the CFO of the company, joins us to talk to us about just that. Ashok, hi, good morning. Thanks so much for making time speaking with us. Well, the festive season this time is falling in Q3 versus Q2 that we had seen last year. But so far, given that we are halfway through the festive season, how's the demand looking like? Are you seeing that festive cheer and festive mood in the consumer sentiment as well?
So thank you. Yeah, the first 15 days, of course, if you know that from last year compared to this year, the Shraddh period had shifted to quarter 3. So it was slightly slower, and even gold prices have become volatile because of the geopolitical situation outside, India, what's happening. But I think things have settled down since then, and we see good demand coming up, towards second half of October and beginning of November. The mid premium, high value are showing very, very good traction, good demand. Growth rates are very high in those segments. Consumer numbers are also kind of growth is high. Entry level is a little bit still, I would say. The whole discretionary aspect at the entry price point, that target segment of consumer is still yet to see the whole thing panning out. But early signs are very good, and we are very, very positive about quarter 3 and the quarter 4 shaping up well.
Sure. Okay. The other thing, Ashok, that I wanted to talk about is the jewelry Abit margin, which has been very strong this time as opposed to the last quarter. Are these 14% kind of levels sustainable given the high competitive intensity as well in this segment?
Yeah, on a full year basis, it is 12 to 13%. Our focus is more on growth, market share gain, number of customers coming to our fold, and delivering a consistent margin profile, which is 12 to 13% for a full year basis seems to be more right. Quarter 2 is more diamond studded activation quarter. So margin profile of quarter 2 is slightly elevated every year. So 12 to 13% is more reasonable band to aim for.
Premiumization has been the big trend over the past 1 year. Have you seen that trend for a company with high ticket size jewelry seeing more demand?
So, we generally look at sub 50,000, 50 to 1 to 2, 2 to 5 lakhs, and 5 lakhs and above. There is no upper limit. There are transactions which happens in couple of crores also, and 5 lakhs and above we generally treat as a more premium category, and that is how we kind of monitor our data. Certainly, 1 lakh to 2 lakh, 2 to 5, and 5 and above are doing extremely well at this point of time. We see a little bit, and that is what I was referring to, sub 50,000, where everyday diamond jewelry or gold jewelry are sitting. There, the growth is slightly slower, but still, I would say that Mia and CaratLane are doing well. Ambitions were maybe even far higher. CaratLane has delivered 45, 46%. Mia also within Tanishq, the number is not separately available to you, similar kind of ballpark. And 45%, 46% by no means is not a good growth rate. But yeah, ambitions are even more, and those we are finding not coming so easily.
Sure, you talked about CaratLane showing a good growth of 45, 46%, but what about the road going forward? What's the strategy you've outlined for yourself when it comes to CaratLane?
So, when we kind of increased our stake and announced that in the month of August, then we have talked about that we see it's a very long opportunity, unfolding opportunity. First 10 years of CaratLane, when they started, and first 10 years have one phase, and next 10 years is going to be another phase. In first 10 years from a starting in a completely digital company, they kind of came to Titan fold in 2016, and the next 6-7 years, they have truly emerged as an omni company, which has a digital and then a good network of physical store and able to connect it very well. Still, the default for their customer is first to go digital, do the search, and finally maybe come to the nearby store. Now we believe the next 10 years, that strategy is going to continue. Their physical network expansion will definitely happen next 3-4 years more aggressively and then stabilize. Of course, the whole digital method of kind of reaching out to customers. Along with that, the brand building, and with the help of Titan, more, I would say, not tighter integration, but our backend support to them on some of the sourcing things, some of the other processes will be slightly higher than what it used to be. So we believe with more closer support coming out from Titan for them, next 10 years for CaratLane seems to be very, very promising to us.
Right. Your company's current market share is around 7% in jewelry segment. What do you think is the market share that you intend to clock by FY25? And what's the strategy then for the near-term store expansion?
So, it's very difficult to give you a number by FY25, but by FY27, when we had some time back talked about our ambition, we believe that we can reach towards 10% or be around that, with all the 4 brands which we have in our kitty. As far as the store expansion, if you look at this year trend, we are 40 Tanishq store, some 50 Mia, and 50 kind of CaratLane, as well as Zoya, which used to be 3 for many years, is now 8, and can be by the end of next financial year should be around 15-16. So all channels, all formats, all brands are kind of looking at expansion rapidly. International is actually doing pretty well for us. We are already 10 stores were there by Q2, and as we are speaking, we are already 13 stores. 2 more stores we opened in Qatar and 1 in Singapore. In US, I think 3 stores more are coming up in this financial year. So all in all, not only network expansion, everything else which we do, whether it is GP, TP, gold exchange program, our gold harvest scheme, the whole focus on innovative design, adornment, and the customer experience part of it. So all things come together, and regionalization strategy, wedding strategy. So there are several. I don't want to talk about everyone, but all put together, we kind of see a good progress and future, not only in India, in the international market as well.
Okay, and talk to me about studded jewelry as well. The contribution of that segment is right now at 33%. Is this likely to be the range in Q3 and Q4 as well, given the demand you're seeing?
No, so like Q2 and Q4 are more where we promote diamonds in big way, and there is a focus. Q1 and Q3 are more gold, where, because they are more rooted into the cultural auspicious thing, Akshaya Tritiya, Dhanteras, Diwali. So people, while they buy diamond also, but they prefer more gold and gold jewelries. So we believe overall, like Q2 is 33, Q3 could be 30, 31. So overall annual, we are not seeing too much change, that we are kind of 30% range for diamond, 30, 31%, any number can come out. Very difficult to predict.
Right. With the increase in the demand for synthetic or lab-grown diamonds, are you seeing any sluggishness in the sale of, earth diamonds in India or internationally?
So, like in India, we don't see anything, so far. No customer is asking, at least to us, about lab-grown diamond. In the US market, the bridal jewelry, which is generally the engagement ring, contributes to 40% of diamond jewelry market in US. Out of that 40%, we do hear that 20% is kind of, so 50% of that bridal segment has been getting replaced by the lab-grown diamond, because lab-grown diamonds are cheaper and you can get a bigger stone on the same price of natural diamond, which you are paying, and maybe slightly lesser than that. So that trend, we are seeing that. But in the natural diamond space, the price corrections which has been there, or people have been talking about, has not just because of LGD. There are many more reasons which has actually caused that, the inventory buildup which has happened in the past. Lab-grown diamond is one of the contributor in that. We, as you are aware, we have a minority stake in a US-based lab-grown diamond jewelry company. And the whole idea when we invested 2 years back was that only, that we want to keep a very, very close and keen eye on the development of lab-grown diamond in US market and appropriately decide on our response. We don't see anything to be done in India immediately, but we will be watchful, we will be ready to respond to evolving situation.
Yeah, but even in terms of the natural diamond prices, there has been a significant, fall in that as well. Will it impact your company in any way in terms of, let's say, the inventory losses or the pricing or something?
So, the diamond price corrections have happened generally, I would say, on a 1 carat and above category, larger diamonds, the correction has been there. Smaller diamonds are not that much impacted. And the predominant business of CaratLane, Mia, and Tanis is on the smaller diamond side, our jewelry. We do have solitaire business where there is certain amount of inventory where the corrections have happened. And we believe that correction, and we have also in response to that have taken some correction on our prices, which will flow through for the next 2 quarters to my mind. But it is not material enough for us to be worried about and to be calling out it that whether our margins are shifting and our guidance is changing. No, it's not like that. Some impact is there, which will flow through next Q3 and Q4. And after that, the fresh inventory, will come in the cycle. But it is not very material for us.
Sure. And any specific trends that you're seeing in watches, wearables, your eyewear business?
So premiumization is a very well-established kind of trend across lifestyle categories. We see in watches, analog watches, where Helios and Titan brand is doing very, very well. Helios is a channel where we sell international brands and doing extremely well. So demand for premium watches in analog segment is very, very robust. And Titan is also taking certain action. We have been on that journey for some year, but taking it even ahead and far above, we are working on. Wearable is exploding segment in India. India has become the largest smartwatch country globally in terms of number of watches. Okay, and we have been kind of playing our game last 18 months very, very well. That business has become now 17% of watches and wearable segment, our business unit, which was 10 years, 1 year back. And that we believe will continue to grow at least for 2-3 years like that. The other businesses, eye care is doing nice, profitable, opportunity is large, but we would like it to grow faster than what it is growing right now. But they are coming out with a lot of innovative products, looking at their portfolio, etc., etc. While eye care remains a core anchor for them, that we want to be expert in eye care, but at the same time, fashion, youth, sunglasses, etc., etc. They are re-looking at their portfolio and doing some stuff around that.
Okay, Ashok, on that note, we'll let you go. Thank you so much for making time and speaking with ET Now.